Hello everyone and welcome to the YouTube channel of BeingACCA. This is Tushita Gupta, ACCA affiliate, and in this video I'm going to be solving the section A of the PM pre-September 2023 mock. So I am attempting to explain all of the questions that are there in this section. So let's get started. First of all, we have the first question over here, right? So ZS company uses throughput accounting. Revenue and cost details per unit for one of its products are as follows. So we have the selling price, material cost, conversion costs. Machine time is the bottleneck resource, and the machine time for each unit is 12 minutes. So the requirement is what is the return per bottleneck hour for the product. So what we will do over here is, first of all, what is the formula for return per bottleneck hour? The formula that we have is throughput divided by time on the bottleneck hour, time on the bottleneck resource. So with this, first I have to find out the throughput. Throughput is nothing but selling price minus my material cost. So this is 180 minus 80. This is my numerator, and the time on bottleneck is given to me 12 minutes. Now I have to convert this 12 minutes into according to an hour. So this is what becomes my denominator. Now I will just solve this equation and I will have my answer. So this will be 180 minus 80, which is 100, and this will be divided by 12 by 60. 12 by 60 is 0.2, so 100 divided by 0.2. This, if I solve this, I will finally get my answer, which will come out to be 500. So this is my answer. Now let's move on to the second question. Right, so the second question says, following criticisms from its operational managers of its budgetary approach, CC Company's management is contemplating including a beyond budgeting approach. Which two of the following are advantages of introducing a beyond budgeting approach? So definitely let's have a look at the advantages. It will result in a quicker response to customer requirements. Yes, this is true. Why? Because when we are using the beyond budgeting approach, we will make our customer care more responsive. We will look at the requirements of them more, and this will result in them getting a quicker response. So yes, that is definitely one of the advantages. And let's look at the other ones. It will lead to a greater focus on financial key performance indicators at the expense of non-financial performance indicators. So this is definitely not true, because when we are going for the beyond budgeting approach, we look beyond the numbers. We are focusing on non-financial aspects also. It will lead to greater centralization and top-down decision making. Now this statement also will not be correct. Why? Because when we are going to the beyond budgeting approach, we are introducing something more participative. So it is not a centralized approach, and neither is it top down. It is more of a participative. So we are left with the last one, and this has to be the answer. Let's understand why this is the answer. It will facilitate the use of external benchmarking. So yes, this is definitely true. When we are going for beyond budgeting, we are looking at a wide range of factors, and these factors will definitely involve using external benchmarks also. We will see how our competitors are doing things, and then we'll implement things accordingly what suits us. So let's move to the next one. Right, so this is question number 3 over here. Which two of the following would indicate that a significant learning effect would be expected to apply? So we have to take any two of these. The production process is complex. Yes, definitely. So when you have a complex production process, your scope for learning is more. So if you are continuously producing, your learning will definitely happen. And so this is the third statement is also correct. If you are going for a continuous production, so your labor will definitely learn from it, and this will have a significant learning effect. Now, why the other two statements are wrong? Production of the product is highly mechanized. No, in this scenario, see, learning happens with labor. So if majority of the work is done on machines, that means labor is less involved. So there will be lesser learning also. And then there is high labor turnover. This also will not lead to a significant learning effect, because since even though you are doing something repetitively, but the people who are doing it is changing because of your high labor turnover. So in this case also, there will not be a very significant learning effect. Now let's move to the next question. This is question number 4. Right. So in this, we have to select whether each of the following are examples of information primarily used for strategic or operational purposes. So let's first have a look. First, let's recall. Strategic is anything which is long term, which is, taken a look at by the top level management of the company. And operational is something which is day to day, which is, left on the lower level management, the immediate people who are doing the job to take these decisions. So these are day-to-day problems. These are primarily not related to your long-term decisions. So let's first have a look. Customer complaints about service levels. So this is definitely operational in the shorter term. Then we have weekly output records. This is also operational, and because this is again day to day. So long term economic growth forecast. So whenever there is a long term, it means that it is strategic. Moving on, results of new products launched by competitors. Again, something that our competitors is doing, this will be impacting us in the longer term. So again, strategic. Investment appraisal calculations. Again, this will not be left to the lower management people. Top management will be making these calculations and then taking decisions accordingly. So this is also strategic. Then levels of trade receivables. This is definitely operational. Why? Because the level of trade receivables, trade payables, everything will be taken care of by the day-to-day managers. So let's move on to the second one, the next question. Okay. So we have FT company manufactures joint products, the FUY and the DAN, which incur 200,000 joint process costs. When the products are split off, 30,000 units of the FI and 20,000 units of the DAN are produced. Their selling prices are 2 for the FI and 2.4 for the DAN. FT company could produce the 30,000 units of FI further to make 15,000 units of LEO. The extra costs incurred would be 20,000 fixed costs and variable costs of $0.40 per unit of FUY input. The selling price of the LEO would be $6. So what would be the gain or loss of processing the FI further and manufacturing the LEO? So we have to find out whether or not we should further process. So in this scenario, what we'll do is we are losing, first of all, we could have sold the 30,000 units of FI and the selling price is again $2 per unit. So my revenue that will be lost will be 30,000 multiplied by 2, and this comes out to be 60,000. So this is the amount of revenue that I'm going to be losing. Now, if we are further processing, what will we earn? Let's compare it with that. So we will be able to make 15,000 units of LEO and they will sell at $6 each. And let's subtract our costs also from over here. We have fixed costs as 20,000 and 0.4 per unit will be our variable costs. So let's see what will be the net effect of the further processing. So we have 15,000 units and 6 is the selling price. Then I subtract my fixed costs, which is 20,000, and then I subtract 0.4 into 15,000, again because this is per unit. So if I solve this equation, this will come out to be 58,000. And if I compare this, I am losing a revenue of 60,000 and I'm only earning 58,000 from doing this. So in net effect, I am in a loss and I will incur a loss of $2,000, which is the difference between 60,000 and 58,000. Now let's move on to the next question. Right. So the next question that we have over here is, select whether each of the following statements relating to life cycle costing are correct or incorrect. Life cycle costs are accumulated from the time that the product is launched. Now this statement is false. Why is this statement false? Let me take it over here only. So this statement is false because life cycle costs also includes the research and development costs prior to the launch of the product. So this statement does not include them. So that is why this is incorrect. Now moving to the second statement, it assumes that a product's costs are incurred evenly throughout the life cycle. This is also incorrect. We do not assume that it is evenly. We just take into account all of these costs. They may be incurred at any time of the life cycle. The maturity phase of a product is when the rate of growth in demand starts slowing down. Now, this is absolutely correct. We have seen it that when your demand is starting to, the rate of growth in your demand is starting to slow down, that means you have reached the maturity phase in your life cycle. Costs in the decline stage include product retirement and disposal costs. This is also absolutely correct because it is in the later stages, in the decline stage, which is the last stage actually, that you will have to incur these costs, which is the cost to dispose of your things and the cost to retire your product. So let's move to the next one. The next one that we have is Joe Company budgeted that it would sell 20,000 units of its main product based on an expected total market of 250,000 units, but it has the capacity to increase production if necessary. Demand for the product is price elastic. However, after Joe Company produced its budget, one of its competitors became insolvent. So which of the following is this most likely to give rise to? So we see over here that their capacity is there, that they have the capacity to increase the production and their market share can also increase with this. So when your market when we talk about the market size, your market size is definitely not affected by your companies becoming insolvent. So the market size remains the same. So now what will happen is Joe Company can actually sell more in the market, so their share in the market can increase. So this can lead to a favorable market share variance. So they earlier, maybe if they were having 20% of the market, maybe now they can capture 30% of their market, taking advantage of the fact that their competitors have become insolvent. One of its competitors has become insolvent. So the answer is a favorable market share variance. Moving to the next one. NB Company manufactures product AE, which has the following cost card: sales price, material, labor, variable overheads, fixed overheads, profit. Each unit of the AE takes 1 hour to manufacture and production utilizes all the available capacity of NB. Right. NB is planning to make a new product, the LH, but would have to divert labor and machinery time from production of the AE. LH uses the same amount of material and labor as AE. So we have to find the relevant cost of the product LH, sorry. So what will be the relevant cost? What all will we take? So first of all, the material cost, which is the same. So this is 50. And then I will take my labor cost, which is again the same, which is 70. And then I will take variable overheads, which are 20. And then I will take my opportunity cost because it is mentioned that we will have to divert our labor and machinery from the production of AE. So how much is my lost contribution is my opportunity cost of not making AE. So what is my opportunity cost? My opportunity cost is nothing but my lost contribution. So how much is my contribution? My contribution is 200 minus 50 minus 70 and minus 20, because contribution is sales price minus your variable overheads. So if I just subtract all of these, 200 minus 50 minus 70 and minus 20, I get 60. So 60 is my lost contribution per unit. If I add all of these up, I will get my relevant cost. So this will come out to be 50 plus 70 plus 20 plus 60, and this comes to be 200. So I will just mark 200 over here and I have my answer. Moving on to the next question. Right. Moving on to the next question, I have, which of the following statements is consistent with the theory of constraints? Okay, so we have to tell which of these is an assumption. So the aim of the theory is to minimize throughput. No, this is absolutely false, because the actual aim of our theory is to maximize the throughput and not minimize it. Next is conversion costs are kept to a minimum. Yes, this is absolutely correct. So I will have my answer as this. Let's move on to why the next two options are incorrect. Non-bottleneck resource capacity is fully utilized. So this is not true. The assumption is definitely in the theory of constraints is that we should use the bottleneck resource to the full capacity. There may be idle time in your non-bottleneck resource. So the last statement, non-bottleneck processes working at maximum efficiency will minimize work in progress ahead of the bottleneck process. So this is also wrong, because when you are using your non-bottleneck at maximum capacity, this will mean that your work in progress is being built up rather than being kept to a minimum. So again, this statement is also false. So moving on to the next one. This is question number 10. CR company manufactures a product with the following cost card: material, labor, machine, and other overheads, and the total production cost is also given to us. We need to find out the limiting factor for the next month. So the budgeted demand is 5,000 units. We have 19,000 kg of material, 11,000 labor hours, and 16,000 machine hours. So let's see how much of each of these units are we needing. So let me write this over here. Yes. First of all, let's have a look at materials. So materials, if I divide $12 by $3 per kg, that means I need $4 kg per unit. So I need to make 5,000 units, and for 5,000 units, I need 4 kg per unit. So this comes out to be 20,000 kg. 20,000 kg, but do I have? No, I have only 19,000 kg of material. That means material is definitely my constraint, my limiting factor. Then have a look at labor. 32 divided by 16 is 2. So I have 5,000 units and I need 2 hours on each unit. That means I need 10,000 units of labor, 10,000 hours of labor, and I already have 11. That means I have enough of labor hours. Let's look at machine. 21 divided by 7 will give me 3, and then I need 5,000 units of 3 hours. So this will again be 15,000 machine hours. I already have 16, which is enough for my production. So that means the only constraint that I have over here is materials. Now let's move on to the next one. Right. NJ Company makes the household cleaning product, the Scream, using 3 main materials. At the end of March, there was a total adverse material usage variance of $1,200. So these are the costs that are the standard cost, and actual usage is given to us. The standard ratio of mixing materials was this much. All right, we have the ratio as well. We need to find out the total material yield variance. Now, we cannot use all this information to directly find out our yield variance. So what we will use is, we will use the formula of material usage variance equals to material yield plus material mix. So that is how we can calculate the required material yield variance. Now what we will do over here is, we have our actual quantity in our standard mix, and then I have my actual quantity in my actual mix, and then I have the difference, and then multiplying this by the standard cost will give me my variance, right? So I will just use this for all of these, bow, co, and dough, all of these products, and then we'll find out our uh, the variable which is over here. We have to find out the material yield variance. So first, let's look at the total that we have. This comes out to be the sum of actual usage, and this will be 1,200. So this becomes my total in both of these places over here. Right. So now my actual quantity in actual mix is 400, 600, and 200. Now let's see, according to the standard mix, what should this have been? So this is my ratio in which I will have to split these 1200. So 35 plus 45 plus 20 is a total of 100%. That means for the first one, this will be 1200 multiplied by 35 and dividing this by 100. So I get 420 over here. Then similarly, 45% of 1200 will be required over here, which is 540. And then I have 20% of 1200 that will be written over here, and this comes out to be 240. So how much is the difference that we are getting over here? We have actually used 400 and we had to use 420. That means we are in a favorable variance of 20. We have used lesser material than needed, and now here we have used 600, we had to use 540. This means 60 is extra that we have used. Now let's have a look over here. We have used 200. We should have used 240. That means we have saved on 40 units. So that means it is 40 favorable. Now the standard cost that is given to us is 22, 25 and 30. Just multiplying these figures, I will have my variances. So this is 440 favorable. This is 1500 adverse, and again this is 1200 favorable. If I add these up, I will get 140 favorable. So now this is the variance that I have for my material mix variance. Now I will use the variance that was given to me. I was given that the total adverse material usage variance was 1200. That means dollar minus 1200 equals to my material yield variance plus my this variance that I've just calculated. This is my material mix variance. Material mix is 140 favorable, hence I am adding it over here. So if I just find out my yield variance from over here, this will come out to be minus 1200 minus 140, and this comes out to be minus 1340. That means my answer is option 2 over here, 1340 adverse. Let's move on to the next question. This took quite a bit of time. Right. Which of the following methods would be most effective in ensuring the security of confidential information? So, dial back security is definitely something that is used as your most common method of securing your confidential information. Passwords should definitely be specific to individuals. They should not be firm-wide passwords, because what is the point of having a password if everybody knows it? So that is why firm-wide password will not be your option. Keeping copies of files at a different location is definitely a threat again, because there may be a threat to confidentiality. Then rain checks upon data entered. This will definitely help you to find out if your inputs are correct, but this will not ensure the security of your confidential information. Now let's go to the next one. LO company budgeted for 10 kg of raw material costing $18 per kg to be used in each unit of product X. A worldwide shortage of material meant that the normal market price of raw materials rose to 22 per kg after the budget was set. So we thought that it was going to be 18, but it rose to 22. LO company's purchasing director, however, managed to purchase the raw materials at 20 per kg. 11,000 units of product X were produced and the material costs were these many. So what do we have to find out over here? We need to find out the favorable material usage variance. So let's calculate this. Right. So I have my amount of material purchased. Let's first find out. It is 2145,000, and we have bought this at 20 per kg. So that means I have purchased 107,250 kgs of material. So let's see how much we should have actually used according to our budget. So we have produced 11,000 units and we should use 10 kg in each unit. So that means 11,000 multiplied by 10. This is something that we should have used, right? And we have used less, so that means our material usage is favorable. Now what we will do is we will take the difference in these two. Taking the difference in these two, 107,250, and multiplying this with our standard price, which was 18. So this will come out to be 49,500, and this is what I will enter in my box over here and submit as my answer. Right. Now we have our next question. Select whether each of the following statements relating to objectives in a not-for-profit organization are correct or incorrect. Now we have multiple stakeholders can mean that the organization has multiple conflicting objectives. Now this is absolutely correct. Why? Because when there are different stakeholders, this means they will have their different interests, and this is how they can have conflicting views on what the organization's objectives should actually be. Ranking the importance of objectives is easy as they can be quantified. This is absolutely incorrect because objectives are something qualitative rather than quantitative, and when something is qualitative, it is very difficult to objectify them. So let's move to the next one. This is the last question for section A. MN has an operating gearing ratio of 40%. Operating gearing is calculated by dividing the fixed cost by your variable cost. The current sales are 490 million and the current profit is 140 million. So we have to find out the operating profit if the sales increase by 30%. So let's first find out how much our total costs are at the moment. So my total costs at the moment are nothing but my revenue, which is 490, subtracted with the profit, which is 140. That means my costs are $350 million. Now, operating gearing, the formula for the same is given to us as operating gearing is given to be fixed cost divided by your variable cost. Right? So with this, we know that in these 350, we have both fixed and variable included. Now it is mentioned that we have an operating gearing ratio of 40%. That means the total, like the fixed cost as a ratio of your variable costs are 40%. So this means that if I want to calculate my fixed costs, that means fixed costs will be nothing but fixed costs will come out to be 350, which is the total, and multiplying this by 40 divided by 140, because if 40 are my fixed costs, variable the total costs are fixed plus variable, so I am dividing this by 140. So solving this equation, I get my fixed cost as 100, and then what I do is I find out my variable cost. Variable cost will be nothing but total minus my fixed component, which is 100, and this will come out to be $250 million. Now they are saying that the sales are increasing by 30%. So if the sales are increasing by 30%, this means my contribution will also increase by 30%. So my contribution will come out to be 1.3 multiplied by your revenue, because revenue will also increase by 30%, and your fixed cost, the variable cost, which were $250 million, they will also be increasing by 30%. So with this, I know my contribution is going to be $312 million. And then if I want to find out my profit, I just have to subtract my fixed costs from this. Fixed costs, as they are fixed, so they will remain the same. I will just subtract 100 over here, and I have my answer as $212 million, and this is my option 2. So I will just select this option and submit. So with this, we have come to an end to section A, and in the next video, we are going to be solving the section B. Thank you so much for watching. Please stay tuned for the next one.